And good morning. This is London. We are streaming the Open for New York. We're going to get into the details on Bitcoin. Nice trades. Congratulations to our VIP. This is London. You guys know, former hedge fund owner, private non-SEC, not financial advice. Let's dig into the details. Nice volatility yesterday. We're going to talk about the pattern in play. If you've been, if you've been tuned in the last several days, I imagine that you traded the pattern on the 4 hourly. I imagine that you created some cash. Boom. Nice way to roll. VIP, let's dig into the details. And in terms of our setup, guys, it is all for VIP. Looking forward to bringing you the very best in 2023. So let's dig into the details. New York is open. We have some additional overseas what was it? Inflationary news. I believe Germany chimed in today. You guys will see that news if you plug into Bloomberg. We recommend that, yes, that you plug into Bloomberg and sources as such. Now, looking at the pattern in play, let's just take a look at the pattern. And I want to just give a warm welcome to everyone this morning. I hope that everyone is doing well. We're going to look through precisely what we were focused in on yesterday. And I shared some information with the VIP in the back. And guys, number one trade group, bottom line, we do not compete is really how we feel. We're beyond that, and it's exciting to know that. Let's take a look, if we could, at the 5-minute time frame. Yesterday, we were streaming. We were looking at, and let me go ahead and let's touch base in terms of the excitement, the pattern in play. And if you were paying attention, guys, when I talk about the expansions, when I talk about the need to understand how to deal with expanding volatility, was it a huge move? No, but it was a very nice move. Take a look at the top of your screen, that top chart. Okay, when you look at this expanding volatility, level of support, buyers on support, level of resistance, expansion, right? A divergence between the buyers on support, the sellers on resistance. It is a high probability pattern. You all know that. High probability pattern. Boom, slingshot to the upside. Nicely done. Nice. Guys, directly from a level of support. I'm just as excited because the 4 hourly is a very prominent, as you know, 4 hourly is an extremely prominent time frame, extremely well respected. So looking at the opportunity to operate along a level of clear support and let's go ahead and put this on Candle Wicks to see exactly, and we did come into contact, guys, near, I'm going to say a 4% move overall. If you really grab the low to the top, a 4% move. And we're assessing this morning to see how we're doing with the New York Open. Without a doubt, want to see if we've got some additional volatility. We kind of front ran that last night, didn't we? Nice move to the upside. We ran into our golden short on the 4 hourly. So what I want to focus on, though, is the same thing we've been focused on, and you cannot ignore the fact that on the 4 hourly you have a perfect picture perfect, and we'll go through the pattern in play yesterday. We want to talk about. It seems a bit uncomfortable when you get a failure on a pattern. It's a percentage probability, all it is. It's nothing personal from the market. When we look at an ascending triangulation, yesterday, this is on the 5-minute, we were hoping for that nice projected move yesterday to the upside. What do? We failed to the downside. What was that? In the context of the 4 hourly, it was a decision by the market participants and the market maker to pick up orders along this level of support on the 4 hourly. Very clearly, boom, down to a level of support and nice trajectory to the upside. These patterns create positive returns. Now, the fail-safe on this, as we were to look at this, and shout out to Venus. Good morning, Venus. How are you? Hope you are doing well. I know that you are trading. Venus is just an incredible trader. If you guys see her trades in the back, and there are enough of them, I don't get to post all of them. But Venus, we love it when you trade. Nice tag team duo VIP 2023 in terms of just the overall just experience of building with you and trading with you is just really exciting in 2023. Looking forward to more of that. Now, we'll talk about, yes, the failure, quote unquote failure. When you look at this, and I know that if you're involved, I talked to you all about taking you behind enemy lines. What is the notion there? What is your worst habit in the market? Why do you continually, that nagging tendency that you have that continually presents itself to you, that characteristic that you look at and like, I did that again. I did that again. Just chalk it up, write a check, swipe the credit card, and you did it again. Like a bad habit, right? So when I talk about like if too much exposure, right? If too much involvement in terms of capital is your nemesis in the market, getting you to lightly expose yourself in the market. Just try a tenth of what you're normally doing in the market already. Do 1/10 of what if you can't do the drastic training, right? The 1/100th of a comfortably expendable amount of cash, right? Don't, if you can't do that, try 1/10 of what you normally do. Just say, okay, this time I'm going to do it 1/10. Fix that nemesis for a moment when you're still in the market and things have moved against you, right? It's like you're in the market, things have moved against you. You decided to go ahead for once and do 1/10 in the market, just 1/10 of what you would normally do. And then you find, wow, the market moved against me, and wow, I'm still okay. I'm still here. I'm still in the market. I can still participate. Getting behind enemy lines. Boom. That nemesis of wanting to over-engage the market, you have to get past that. We have to get you beyond that, guys. In terms of your training technique, it's just a huge part of trader development, bottom line. So when we see a failure like this, and this is a fractal, as you all look at a fractal, it also has a percentage return to a flat top resistance, right? A probability of a percentage return to a flat top resistance of an expansion that is also in play with the flat top resistance descending a line of support. Each of these has their own particularized and specific level of probability. 62%, 69%, 72%, 85%. You need to know precisely. You need to know precisely what you're involving your capital in. As you were to look at this specific move here, and the complication on the 4-hourly is we look at a nice move. You guys know we rock the bells. Boom. We call these bell pattern formations. We've got handouts on them. They're fantastic, right? As we look at price, and again, we're up and over a flat top resistance. You guys know. It's apropos, isn't it? It's, are we going up or are we going down? Yesterday I brought you the example, huh? A couple guys in on the football field or wherever they may be, huh? Or girls at what were they doing? Girls at the dinner parties, right? What's the bottom line? Most of the time, it's like, what's the easy solution? Are we going up or down? You know, is Bitcoin going to go up or is Bitcoin going to go down? It's like, well, man, we're sitting underneath. And pay attention real quickly, guys. Hope you're all doing well this morning. Let me take some of these divergences off the map here. You know, this was a situation, I brought this up yesterday, just in terms of the colloquial, in terms of the expression of why I would say something like that. We found it in a book, I'll tell you that, and we traded it on the screen and it worked, bottom line, and it makes money, period. Capiche? Capiche. Now, bottom line flat support, descending level of resistance, just magnets. Anytime you see a flat bottom support in the market, it's a magnet. Anytime that you see a flat top resistance in the market, it is a magnet. Bottom line. Okay, so in terms of direction, aside from fractional completion, one of the biggest parts of trading to understand. Everyone starts to assimilate to technical analysis. They see an amplitude, a measurement of volatility, meaning the height of a pattern. Traders begin to involve themselves with the expectation of a 100% completion to the upside or a 100% of that height of the pattern, measurement of volatility. Completion to the downside. Fractional completion means partial completion, means a percentage of the completion of the amplitude of the pattern. While the market is expecting, the 90 to 95% of TA experts are expecting a full amplitude move, a full height of the pattern. What's going on behind the scenes? What's going on with the top traders? The top traders have calculated and have probabilities associated with not just a full completion to the entire amplitude of a pattern. No, they have probabilities and are involving capital and deploying it in line with a fractional completion probability, a greater probability of a 50% completion, okay? A greater probability of a 50% completion on the majority of patterns that we see, if not all the patterns that we see. Lesser probability of that full completion. Say, well, why would that matter? I just do. I bring up because you can all connect with it, and it's early in California. I want to shout out to everybody, all the VIP. What's going on? Hey, salute to anybody overseas. Joint forces in the house. What's up, Chris? My man, what's up, Chris? Nice to see you overseas. He's our Australia military accompaniment. My man, what's going on? And big salute, shout out to everybody in and overseas, etc. Chris understands these features. He's been in the market for what, 20 years? Hey, what's going on, Chris? Nice to have you. Great to have you in the back. Love the charts. So when we talk about a fractional completion, we get this, all right? We get this full completion. We're happy to get that. Bam. When we satisfy the market in terms of that completion, it's fantastic. But when you cut it a little short, okay. The sweet spot is that 50% mark. 50% of patterns are going to go. If you wanted to say, okay, design me some algorithm that's going to have the highest percentage hit rate, it's going to be the 50% completion. And you say, well, how is that relevant? Well, design me an algorithm that has the highest hit rate, that has the highest level of success in the market. What's the percent that is going to complete to on the patterns? 50%. Indeed, 50%. How is that relevant? You guys understand how that is relevant. Now you may say, well, I'm a diehard bull. I just can't quit. I got to go to the casino again. It's Sunday morning. I know we're going to, the kids got to go to church or synagogue or the mosque, but hey, whatever day of the week it would be. But I got to go back to the casino. I know it's Sunday morning. I got to go. I got a reservation. I got a table on hold at the casino. You don't understand. It's Sunday morning. I got to go. I got to go to the casino, guys. To your family. Oh, I see. All right. Same guy, same mentality. Maybe not worried about what? What are your max probabilities? Right? Get out of the danger zone. That danger zone, just take it with a grain of salt. I deal with a lot of big-time traders, a lot of heavy pocket big-time traders. You know this. You guys know this. It's exciting. Sunday, maybe the casinos were built for traders. Who knows on a Sunday morning? The markets are closed. We don't know. I say in jest. But as we dig into the details, let's review after dealing with fractional completions. We're assessing right now New York Open with volatility of Bitcoin. A little bit muted this morning. We got a front run last night, bam, of a nice move. Nice move. It's 4 hour that you see, that specific expansion. Learn to trade them. Trade 100 of them. I said yesterday, trade 200 of them on the lower time frames. You're going to start to see, it's like, man, that was a really nice one. That was a real nice construction. The construction had its own dynamics to it, didn't it? You'll see that some of these are long and narrow, right? Some of these are very long and narrow. You're going to see a 4% move overall. Let's take a look. 4.04% maxed. All right? That's nice, guys. And an evening of trading, boom, boom. With that degree of certainty in terms of a level of support, very nicely done. Shout out to the VIP. I know the ones that are trading, guys. Now, I'm going to bring this up as we also, and I've got to get through. This is a magnet zone. What do you have a little bit breaching into this on the 5 minute? Brought this up in the back just a touch, okay? In the back with our traders. You do have, instead of just a clear flat top, because we pushed here yesterday. Do you guys recall that on that ascending triangulation? You guys recall that ascending triangulation? We tried to get up and out. Underdeveloped to the extent that we normally like a 1-2, 1-2, right? You guys know that. So we have that internalized level of resistance, that externalized level of resistance. The complicating factor was here, right? We like the 1-2, 1-2, up and out. So here, preceding pivot. Always pay attention to your preceding pivots. Can cause and did cause quite a frustrating event there, okay? So looking at this specific failure here, looking at the resistance, just a nudge higher. We just can't stand failures, right? Except that they present opportunity zones, right? Absolutely, opportunity zones in the market. In terms of, unless you're overexposed, you know that, unless you're overexposed in the market, if you can participate to the downside, it's a beautiful thing. If you cannot, I don't know why you're in the market, and you won't be very long, bottom line. You guys know that. Level of resistance on this specific 5 minute. Now, we can hunt for a flat top on the specify into the 15 minutes, okay? But you do have the contradiction now, a lack of, I'd say, confirmation in terms of multiple time frames of having a across-the-shelf, boom, flat top on, say, 3-4 different time frames. consider such. 15-minute, not as prominent of a time frame, does have the flat top resistance, right? We can dig into that 15-minute in terms of, I'd say, placing our probabilities in proper order. And good morning, guys. Hope you're doing well. And gals. Hope everything's going great. Nice move. Boom to the upside. Now, let's discuss, okay, the Bollinger Bands. We got to talk about them. We get to talk about them, right? Very nicely done. Very nicely done. The Bollinger Bands on the specific, let's get into here real quickly. Let's go Bollinger. You got to get over here. Let me get into, it'll be right here. So let's go into the Bollinger Bands. Let's take a look at the 4-hourly. The 4-hourly was beautiful. Beautiful. Bollinger Bands, right? Taking a look at Bollinger Bands, it is probably the most boring thing to say on the planet. Bollinger Band. It just is, right? John Bollinger, right? We're not John Bollinger fans. Standard deviation, measure volatility. That's it. Give me an average, right? Give me an average. In terms of that average, okay, give me some degree of a measurement of volatility around that average. That's it. I want to know what's the measurement of volatility around a specific average. Yes. So relevant, highly relevant. Only the two, not only the two standard deviation. We look at the 1, the 2, the 3, the 4, the 5, the 6, the 7, the 8, the 9, the 10. Yes. How do we do that? Z-Pack, volatility tool. Okay. Z-Pack. Literally looking at price action. If we were to look at this, I'm going to drag this up for a moment before we wanted to assess, for instance, the specifics on hits and standard deviation at the -3. Boom, 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 boom. I want pricing there too, huh? I want pricing there as we were to look at the specific prices here at the specific levels of standard deviation and the tendency of price to operate. If you were to look at the specific hits down into a predictive cyclical, cyclically oriented demonstration of price action begins to reveal itself at specified levels of standard deviation. Expectations on the 4-hourly that, yes, you will hit again the -4 standard deviation. But price is up there, right? The price is on the right-hand side. Just to understand what volatility is. Do you want to capture volatility? It's price action. Without a doubt, it's price action. Okay? So as you're looking for price action, the bottom line is how are you going to involve yourself in the price action? Let's dig from. We've been through Z-Pack. You guys go and check out some of our preceding videos on Z-Pack, our volatility tool. It is a hybrid. I'll just tell you of MACD, RSI, and we've incorporated a bit of the standard deviation, quite a bit of standard deviation, which is the underlying principle of a Bollinger Band. Doesn't belong to Bollinger Band or to John Bollinger, a standard deviation, not at all. So, but nonetheless, we give credit where credit is due. He's done a lot of work in the industry. So back into the specific. Now, you may say, well, how do I trade this, right? I will tell you, once you get a launch, you have a percentage probability for a return to prior resistance. It's in the 60s. 62, 65, get up into differentiated pattern, 69%. Okay, say 62, 68%, depending upon your market condition. You have a percentage of these patterns that want to take off and just not return. Okay, if you trade these patterns enough, you know the sweet spot entry is along the level of support, bottom line. Sweet spot entry is along the level of support, bottom line, right? There is a percentage of these patterns which will literally boom, rock and roll and leave behind. Let me make sure that I can get this over to you guys there. But the percentage of the patterns that literally just decide to rock and roll. And I worked with where to put you guys on here, huh? I don't know where to put you guys. I'll put you guys right here. What's up? Yo. VIP all the way. What's up, guys? I don't know where to put you guys on the screen. I thought of one chart, then putting all VIP, but anyway. Anyway, I don't know. You guys look fine to me. I'll put you right here. It's fine. Yeah, I'll put some cool rotational something somewhere. So looking at this feature right next to our VIP, take a good look at the charts. Huh? That's the bottom line. I want you guys taking a good look at the charts right now next to our VIP. Easy to do, huh? Okay, now a percentage of these will just take off. Boom. Where's the sweet spot for entry? Sweet spot level of support. Always understanding what? Always understanding the following. Nice confirmation, by the way, back onto that elevated level of that throwback onto that elevated level of resistance. Noted the 15, I'm just saying, guys, noted the 15 minutes just still sitting there, cracking its knuckles out. Flat top resistance on the 15-minute underneath. Yep. No problem. Absolutely washing people who may have gotten a late notice. Ooh, we're going back. The market's famous at this, guys. The market is famous. Ooh, we're going back towards a flat top resistance on the 15-minute. The market is famous, just famous. You guys know this. We're saying, ooh, we're about to go right here. We're right here. I'm going to short. No. Careful, guys. Careful, 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 careful. You've got a host of issues involved in a rebound like this. If you were to go into the 5-minute, for instance, we have the Bollinger Band on, and I'm just going to use that as an over under the 20 moving average. Are you an over a moving average? Are the bulls performing? Are you under a moving average? The bears are performing. Easy stuff. Easy stuff. I say Bollinger Band, one of the critical components of it is the 20 moving average. Separate yourself from John Bollinger if you don't want to be involved in the conversation with his particular style. We're not overly involved in it, but we do recognize the New York Institute of Finance. Okay, New York Institute of Finance, we have a lot of financial professionals, current and past, in our group, BlackRock, JP Morgan, etc. No endorsements from me to them or them to me, guys. That's not, or them to us. That's not the idea. It's just the level of caliber of TA that we build, that we bring. And even those guys have to do their own TA, or they are sayonara. Hasta luego. Ciao. Nos vemos, right? Without a doubt. I want to shout out and say good morning to all the VIP. Now, I tell the traders all the time, you all know this. It got close, huh? Yeah, got close. Look at this. You see the candle wick action to the downside on that flat top resistance on the 15-minute? Yeah, within threshold. That's close, guys. Look at that. That's close. How far away did we get? Let's take a look. Let's take a look. And we are at, $50 away. Not bad. Not bad at all. Now, in terms of the discussion, I always tell traders, I tell our traders, I tell you guys, I tell strangers to my best friend, it's the same answer. Does not. And one more thing to go over in terms of these expansions, please listen to what I'm about to say and to the expansion discussion. It should help you not lose money and make money. So pay attention. It should. It's not financial advice. Former hedge fund owner, you guys go get your own, huh? Bring it to me if it's any good. Go get your own financial advice and bring it to me if it's any good. In terms of the 5-minute time frame, I don't say that tongue in cheek. Bring it to me if it's good. A lot of people bring me a lot of things. If it's good, bring it to me. Okay. In terms of the 20 moving average on the Bollinger Band, what do we have? You have either targets to the upside if you're over the 20 moving average. Targets to the upside if you're over the 20 moving average. Or you have targets where? To the downside if you're under the 20 moving average. Okay? That's a Bollinger tactic. That's a pro-Wall Street tactic. Per me, I've just decided to tell you guys that this morning. No. Per the New York Institute of Finance that trains pro traders. Okie dokie. This is not a, you guys know this is not a, what do they call them? What are they? Prop shop technique training camp. Out. Hasta luego. Not here, guys. Not here. Okay? We deal with a lot of people who are really successful in life and are already trading and competitive. Many times they are already competitive with, or they may actually already be real pro traders that we interact with. Okay? A lot of our traders are already very successful in life. They bring their capital skills, their market skills. Many of them are already involved in markets. Oh, yeah, involved in markets and pricing, understanding the flow and actually looking at the price. How many traders just trade patterns? Just trade patterns and averages and indicators? No. We deal with people who are plugged into the price. It's back to 23,772. Okay. Yeah, and they'll know because of their exposure in markets, whether it not be on a professional level, definitely on a commercialized basis, the majority, right? So at successful levels, and I just bring that up, some of the tendencies that we see, and it's not required. Some of them have logistics backgrounds. Some of them are highly analytical, high-level math skills. Some of them just have grit and determination to succeed in the markets. Like, hey. Sometimes the grit and determination, anybody knows, involved in any markets can perform extremely well. That sweat equity goes a long way. In terms of over or under the specific 20 moving average, I bring this up for the following reason why. You are not going to make a big move to the upside or a big move to the downside without doing what first? Bravo to all the VIP who are focused in on this specific issue. You're not going to make a big move to the upside without doing what? Without crossing the literal 5-minute time frame 20 moving average. It is a threshold litmus test of what direction you may be heading. Hello, you're not going to go to the upside without crossing over the 20 moving average on the 5-minute time frame. You got to cross the 20. Period. You say, well, we're already above the 20. Oh, you're holding the 20 moving average. I see you're holding the 20 moving average. I see. Now, as you were to consider that litmus test of what direction we are going, if you're trading a short and you're below the 20 moving average and the bears are holding price below the 20 moving average, everything is fine. Everything is good. Be careful of both your pattern interplay and your operation up and above the 20 moving average. Guys, just be careful of it. Is it a guaranteed lockstep? We need to get in and whipsaw back and forth on the 5? No, you need to incorporate in your 1 minute, your 3 minutes, your 5 minute. You guys got it. Your 15 minute, your 30 minute, 45. You guys got it. Right on. Now, but that is a key litmus test that I know to be very, very effective when people want to know, and they don't want to day trade. The majority of people you guys know do not want to day trade. And caution, I want to say caution. Caution, one of the benefits of our relying on the authorities and the experts in terms of technical analysis is I will continually direct you to the proper answers in New York Institute of Finance or the Empirical Data Studies by Bulkowski, the most well-respected empirical data sets, probabilities, etc. in the market. Tom Bulkowski, hand-signed books. Love them. Thank you, Tom. Appreciate it. Nice to interact with you, my friend. Thank you. Looking at the, if you don't have his books plural, get them. Get his books. Bulkowski. Blow you away. Read through the thousands of pages of statistical and probability studies he's done on the preceding decades of all the available market information. Incredibly gifted guy. Retired in his mid-30s from investing. Huh? He's still investing, still having fun, but he retired in his mid-30s. He played the game well. He played it right. Now, in terms of the over the 5 minute, under the 5 minute, watch it. What's the quick and easy of this? Well, under the 5 minute would be the bottom side band target. Over the 20 moving average. Over the 20 moving average on the 5 minute time frame. We're going to identify the upper band or lower band, the second standard deviation, as a target to the upside or target to the downside based upon condition of price vis-a-vis or in relation to the 20 moving average. So we're over the 20 moving average expectation. We have a target to the upside, okay? You need to back test this. You need to, and that's not a scapegoat. You need to make sure that the traders on said time frame are respecting that tactic. You may find a time frame like nobody's trading the Bollinger Band on this tactic. Nobody's trading over or under the 20 moving average on this tactic. If you have, and I'm going to say this, if you have your own set of moving averages that you prefer to deal with, you may like the 5 and the 20, you may like the 4, the 18, you may like the 4, 9 and the 18, you may like, guys, there is a half a dozen to a dozen great combos, the 100, the 200, just focus on the elements in play in terms of over or under. And I like the 5 minute time frame, because everybody wants to know, is it going up or going down? We can talk about the percentage probabilities on the 4 hourly. For instance, 4-hourly giving us a nice indication of a move to the upside with the following. And we'll keep it a little bit of a brief stream today. Just wanted to come to you guys because this was a good trade to engage in. Looks a little bit drastic on this 5 minute. A little bit of volatility. What do we say? A little bit of volatility with the open New York. Not too much. Huh? We've seen better, right? We've seen better. Now, Fire Nice doing well. You guys know that. Fire Nice 4-hourly short just rocked and rolled. That golden short, our kernel regression. A lot of hedge funds use kernel regression. You guys know that? Pretty cool stuff. Pretty cool stuff, guys. Looks like potential for a downward sloping. Always identify any type of a downward sloping channel. Ba-boom. Easy stuff, guys. We're not trying to complicate anything or lay claim to anything sacrosanct in the market other than the fact that if you literally purpose yourself to beat the best, guys. I want you to be the best. I want you to beat the best to be the best. Bottom line, I literally do. Like beat the best to be the best. Like get on it. Like that's how I roll. I want you guys to be that caliber and enjoy that level of success. And I know that you can. I've seen some incredible success stories, and I want you guys to succeed like that. I know that you can. It's not easy. You don't wake up every day and like, ooh, I really feel like beating the best today. It's part of the journey, though. And that's what VIP is all about, guys. That's what our channel is all about. Now, in terms of the specifics, we talked about Bollinger Band over or under the 20 moving average on the 5-minute time frame. It's just a small enough time frame to get the attention of anyone who's trading, of anybody who's trading, that, hey, by the way, we day trade. How you doing? By the way, we day trade. You know, you'll meet somebody, stranger friend or family. You'll meet them and they'll say, well, what do you think? It's going to go up? It's going to go down. Not that we don't have on the 4-hourly a nice, predictable, high probability move to the upside based upon the specific expansion. We say bell pattern formations. We rock the bells. Now, the caveat being, okay, that which needs to be considered immediately on any of these expansions. And remember that I said this. Please, you will do better in the markets. You'll do better in the markets. I just tell you, you'll understand the markets a bit better. Pardon me. Understand that part of the beauty of a bell pattern formation, a broadening, expanding, descending wedge, right? A mouthful. We call it a bell pattern formation. Expansion to the downside, right? Expansion to the downside, bullish. Right? Expansion to the upside, typically what? Bearish. Expansion to the downside, bullish. Expansion to the upside, typically bearish. So we want to find that. Boom. We don't care about that. All right? Expansion to the downside. Increasing volatility between the sellers, guys, on resistance and the buyers on support. Now, one of the features of an expanding pattern is the following, and I must cover this, is the fact that you may have one of these which decide to brilliantly perform like what? Boom. Brilliantly perform like that, you got it. What does that turn into? That turns into a bump and run reversal. What would this be? This would be your lead-in. Anytime that you trade these patterns, because if you've watched the last 2 or 3 streams and you've decided to trade an expansion pattern and you were involved along a level of support, a clear 4-hourly level of support, if you watch the preceding streams, decided to trade, maybe this is your first week of trading, who knows? Or you say, maybe I'm going to give it to London one time, we're going to try this one, see how it works out. Then maybe we're going to, this pattern can seem like an absolute catastrophe in the following situation. Pay attention and good morning. Can seem like an absolute catastrophe if and when it does the most beautiful thing and wham, decides to operate to the downside to create a bump. For what? For a run. Okay? If you're plugged in to the authorities, and if you're plugged in, guys, I say the authorities, the technical analysis, the authorities, the framework, like academic authority, you know, the who's who of technical analysis. You understand that anytime you're dealing with an expansion, you're going to have orders below. You're going to be watching your momentum on the lower time frames and the larger time frames, right? You're going to be watching all the parameters, all of your oscillators, period. And you're going to be prepared for a hit down to and through below, boom, because we love bump and runs. A bump and run, as you will look at that in the back, VIP, you all know, the bump and run has some potential to really cover some ground. It's just another form of an expansion. That's all it is. In fact, when you look at bump and runs, you'll find that they still categorize themselves as an expansion between the buyers on support, sellers on resistance. So that's the bottom line. We're always prepared that any initiation move could, and gosh, it would have been nice to get down into this zone. Wham, boom. Okay? Give us that lead in, give us that bump, and give us, boom, the run. Bottom line, just remember we discussed it. Now, do you have any reinforcing principles or lines? Or you may say on this one, come on, this is kind of like a no-brainer here because we had this. You may say that was really kind of inconceivable on this, and I'll show you why. You may have these types of considerations become important when you say, oh, I understand that. Let me move this over here. Let me move this over. Let's do this on here. You may say, okay, let's do this here on the bottom one. Yeah, okay. As we were to look at this, you may say, yeah, I understand it could have been a bump and run, but at the same time, you have a level of support here. Boom, boom. So really, we're along the channel line. So, you may have done the analysis and say, no, I get you. I understand that, ultimately we would like more expansion, more volatility along the downside in any kind of an expanding pattern. I get you. I understand. 100% I understand that. I understand this could be a lead-in. I understand what a lead-in is, you could say. But in this specific instance, this specific circumstance, I found a little comfort, reinforcement, and maybe some confirmation that the drop necessary to create the bump for the run, right? The drop necessary to create the bump for the run just was a little less probable, okay? Due to the reinforcing principles of this level of support in the channel line configuration of the 4-hourly. Perfectly well thought, perfectly well delivered in terms of a thought, let's say a thought process or rationale. Very well done. Particularly if you're able to reinforce your position with the understanding of the market dynamics of the lead-in. Don't tune out when you just hear a word that you're not familiar with, because it's worth disregarding if it's one guy saying it, And unfortunately, when you tune out something like a lead-in because you haven't heard it, and this is just this is not a fundamental or technical analysis. You have no idea. You have no idea. If you want to tune out without understanding what a lead-in is for a bump and run, you have no idea. If it's too much, okay, if it's too much, then I got to tell you, you got to step it up. You got to step it up. And we're in a group that steps it up. Bottom line, lighten the loafer kind of, give me the easy answer. Out. It's not us, guys. It will never be us. You know this. So, yes, looking at the fundamental requirements for a bump and run. Understanding how a bump and run shares the same configurations, pattern dynamics as a broadening descending wedge for both the bump and run. Yes, we group them together. You almost have to group them together, guys. They're some of the highest performing patterns in the market. Hey, VIP, what do you guys say? Huh? We know this. They continue to prove themselves to us. They just do. Exciting, isn't it? Way to trade, VIP. Way to trade. Right? So in terms of the specifics, a lead-in, boom, a bump and a run. Yeah, that's what I'm talking about, because I like this down in here. I like that down in there. Right? As opposed to, like, I'm all about volatility. I want more price action. As opposed to just your expansion in here, and we're up and out. Boom. All right, but I want to dig deeper. I want to get down into this zone, right, beyond the lead-in. Just give us a drop. Boom. And if you catch the drop, You get to trade essentially in both directions, which is nice. You guys know that you get to trade in both directions as well, huh? That's good, huh? You guys understand that as well. I don't encourage it for everybody. The market can be highly particular in terms of who it allows to short it. Please listen. The market can be particularly, it seems like discriminate, certainly discerning about what? About who it allows to short it. Yes, the market can be particularly, nearly at least discerning, highly particular about who it allows to short it. You try it. You hit that short button at the wrong time, particularly at the wrong time, without a doubt. Hit it in the wrong circumstances where the probabilities are against you. It'll pick up on a new short trader quicker than. You don't think the market's going to pick up on its own little algorithm when someone's trying to short and they have no idea what they're doing? The droves of the millions of participants that don't know what they're doing on shorts. Okay? Who knows what they're doing? Is that a claim of superiority by me? No. Look at the New York Institute of Finance. Look at what pro traders are learning. If you don't know, get the information, assimilate the information, and at least know what they've got in terms of their ammunition in their arsenal on their desk bookshelf that's going to outcompete you. Well, you got pro traders sitting there. The guy's not a pro trader with a prop firm. I'm telling you, pro traders at desks with the literal materials that you can stack your bookshelf with. Now you can say I don't need to stack my bookshelf. I don't need to do that. I don't need all their information. I wonder who's going to win that. I wonder who's going to win. You're going to keep shopping around on YouTube or the internet for your TA? Man, I have no idea long term who's going to win that battle. Pro traders, that are sitting there with 10,000 trades under their belt that went to the New York Institute of Finance, and they've got a bookshelf full of authoritative, scientific, near scientific, many of them, resources that they engage in. And you may want to deliver yourself from the land of lack of opportunity with YouTube or Google searches. Who's going to win that, guys? Who's going to win it? Google's pretty good these days. It can get to you to the grocery store. Okay, maybe the wrong one. Yeah, possibly the wrong one. You got to know where you're going, guys. You got to know what you're. I bring that up because I'm a staunch proponent of the proper levels of TA. You guys got that. You're gonna beat the pro traders with the. You're gonna beat all those guys, huh? No, you're not. You guys know that. You're not. You got to put in the sweat equity. You got to put in those. You got to put in that. You got to want it a little bit. You guys know that. So, a little bit of gravity on this flat top resistance on the 15-minute is trading. Nice slingshot to the upside. We have an opportunity here for a bull flag. Let's talk about this. Unfortunately, we're going to have to hunt time frames. All right, we're going to have to hunt time frames again. We have a little bit of an ascension here on the 15-minute time frame. Let's go 5-minute. Nope. What am I searching for right now as I hunt my time frames? And this is what makes this so easy in the back. You guys know this. What makes it so easy? I got them all, right? And we'll work on getting me back on that side so that we can do a little bit more, just a little bit more in terms of the incorporation of that material during the stream. I kind of leave it there as for VIP right now, but we'll work on getting me to that side. It's just right behind me. It's literally just right behind me. I can go over there right now if we need to, but I just have to turn the chair around. So we do have a flat top resistance on the 3-minute time frame. Noticed. The market has noted such. A little bit of differentiation on the 5-minute, on the 15-minute, on the 30-minute, on the 45-minute, on the 77-minute, on the hourly. And 4-hourly is about where we lose the opportunity to distinguish between these two pivots here. Okay? It becomes important because a 3-minute is evidencing a flat top resistance, which gives it a distinct characteristic in terms of the pattern identification. Okay? The pattern identification is going to be distinct on the 3-minute versus the other time frames. Now, I will reach and dig through time frames. I will do so trying to find my particularized pattern. Okay? I will look through all the time frames. I will hunt and dig and push and pull and scrap to find my highest probability pattern. For you, whatever pattern you prefer most. Okay? But I want my pattern. I want my 72% to 75% to 80% to 85%. That's what I want. Okay? I like my drop, my bump, and my run if I can get it. Yes. So I'm going to dig through and scour through every, not just finding the specific pattern that I want. I want to differentiate it. I want to know whether or not we have confirmation on every time frame. Like, man, we got this pattern. This is the same pattern on every single time frame, A through Z. Confirmation in the markets. Like the traders, no matter how hard they try, they can't avoid this pattern. You couldn't avoid it on the minute, the 5 minute, let's say the 3 minute, the 15, the hourly, the 30 minute, the 40. You can't avoid this pattern. Everyone in the market is trading it. Versus, well, this pattern's only on one time frame. Now, I seek out my hidden gems, right? I seek out my 70+% patterns. I'll take it on any time frame. Absolutely, I will take it on any time frame, and I want you guys to look equivalently and to scour through equivalently as you look at your different time frames and try and gain that edge on the market. Understand at certain points it's for comparative purposes. Like if we have an expansion on like the 45 minute, right, versus the 30 minute. So the 45 and the 30 minute are confluent. Okay, they have a nice overlap. 45 minutes to 30 minutes. See the operation, the expansion here, right? The 15 minute coincides as well. That's 1, 2, that's 3 time frames. The 5 minute coincides as well. That's 4 time frames. Great. So the outlier right now is the 3 minute time frame with a flat top resistance. And amidst all of this, you're going to want to do what? You're going to want to go into your candle wicks. Now, the candle wicks are going to be, they should represent the same high. They should represent the same high across time frames. They should, okay? The candle wick should be the same. That high ultimately reached in the market on the wick is going to be the same high, irrespective of what time frame that you are on. At some point, you'll consolidate the two specific pivots onto one time frame because your time frame will expand. So as long as you have differentiated, your time frame and you're zoomed in enough to have two separate pivots here, you should have the same on your wicks, okay? You should have that same high. So it's kind of a way of cutting through and getting across the time frame, across the board. Answer, okay, is that, well, on the candle wicks, we appear to be let's say ascending in terms of our level of resistance. You guys got it. So you can do the same at any point in time to try and cut through the noise on the different time frames. Just say, no, I'm just going on the wicks. I'm on the wicks. So, but we note, as I said, we hunt for flat top resistance on the 3 minute. It gains relevance. This specific pattern has its own set of probabilities independent of the other patterns. Now, I'll tell you what I personally do based on, I won't get too far into empirical data studies, research of what we all do here. I won't do that. I will tell you this. I hunt expansions like this, boom, to book trades is what I do. I want this pattern on any time frame I can get it, okay? Any time frame I can get it, I want this pattern. You understand this, everybody knows. But when we continually see it create cash in the market, hello, everyone, when we continually see this create money in the markets, there were some other patterns in play. It's like, it hit a Fibonacci level. It hit a broadening flat top, whatever the patterns in play were, it did return to a flat bottom support on it. We covered that, like magnets they are for price action. Indeed. We made the joke yesterday. Are we going up? Yeah, man, what are you saying we're going up? We're underneath the descending triangle. We're underneath the descending triangle, man. What do you think? What do you think? Are we going up, huh? God, imagine guys hanging out, girls at their soiree dinner parties, huh? Just throwing it out like they mean it. throwing it out like they mean it, guys. In terms of this, paying attention. Flat bottom support. Oh, yeah. So, you think Bitcoin's going up? Guys who know, they just got it. Just draining three-pointers, just for fun. Not even really having to look at the bucket. Just bam, bam, bam. No problem, huh? They got it like that in the market. So, they're draining three-pointers on the basketball court. There's no problem, huh? And what's the point yesterday? The whole notion is the following. It's not exactly like draining three-pointers with your eyes closed, right? Behind the back three-pointers all day long, boom, boom. Don't get that impression. Don't get that impression. You heard that analogy. However, we were down here. We had a flat bottom support. You understand this. Yesterday, the notion was like, man, it's almost a shoe-in. It's almost a given. Close your eyes. You're going to make it. Watch this. Boom. Three-pointer. Flat bottom support, descending line of resistance. We're below a descending triangle. Yeah. So are we going up? I mean, come on, man. We're below a descending triangle. We're below a flat bottom support. Find this on a time frame. Trade these. Trade them. Okay, to where the market experience and my commentary becomes your specific experience with the market. And you can count that as your own experience in the market. And it won't be me just talking. It'll be us talking. Yeah, that's the good part. That's the way to look at it, guys. That's the way to look at it. And I don't view this as just me talking. This is us talking because you have spent enough hours in the markets. And I try and talk with you guys a lot because I know a lot of you are trading for like 3, 4, 5, 6, sometimes 7, 8 plus hours a day. Some of you making very good amounts of money trading 7, 8, or 9, or 10, or who cares? It's a good day every day. Good day. True. So you're busting it in the market. Yeah. So I'm gonna say I gotta get up at 4 o'clock in the morning. Huh? I gotta get up at 3:30 or 3:45 in the morning working my charts. I gotta do all this stuff. Man, I get to do that. It's good stuff. Get to jump on the market. We got some information incoming. It's, I think, at 10 o'clock DC time. You guys can help me with that. I'm going to let us go before that. Now, the classic, the perfect question. I brought this up, or the perfect way to end was what? Yesterday, I told you guys. What happens to the traders? Huh? What happens to the traders when they, and you guys check yourself on this morning. Good morning. This is London with Bitcoin Spike and VIP Trader. Hope you're doing well today. Yo, we got a nice move on the 4 hourly. Beautifully well done. The expansion. Boom, bam. We called it. It's not us that called it. The last 40 years plus of the markets have called it. Bravo. Wait. Now, I told you yesterday I'd say just as a point of reflection. I mentioned yesterday as a point of reflection. A much more decent way to state that. Apologies. I mentioned to you yesterday as a reflection. Okay? The following. That market participants that I see frequently, they want the right answer. They get the right answer. 70+% of the time on this type of a pattern on the 4 hourly, you're going to the upside. The question becomes, at what point? Completely different discussion in terms of capital consideration, in terms of capital deployment. We have a capital line. We have a capital line that we look at, period. Differentiated on time frames, et cetera, beautiful. RSI, MACD, all that good stuff. You guys, if you saw how it's calculated and how it's programmed, you'd be like, this is RSI. It is with a kernel regression modularity built into it. As much as TradingView can handle, as much as their computers literally can compute, it's top tier. Period. Okay? Now, traders, as I alluded to yesterday as a point of reflection, traders are infamous for what? They're infamous for wanting the answer, getting the answer. Trading in terms of the answer, and then what? Well, now, are you in away from a 72 to 75 to 80%? Yeah. You're away from that 80 to 85%? Yeah. Now, what do you start to do? Traders infamously do this. Well, now I'm like into that 50-50. Now I'm into like the 55, maybe 55-45. Maybe I'm into like a 60-40. I mean, what do I do? I'm at a 62. Hey, excuse me, I have a question. I'm at a 62%. What am I supposed to do? Ah, really, huh? What do they start to do? They start to go fishing in the wrong pond, on the wrong place, in the wrong pond, in the wrong tier. And yes, they literally start to. What do you got here? Figures came in close to expected at 10 a.m. There we go. Manufacturing PM. Thank you. Close to expected. Look at Venus, huh? Rocking and rolling. Thank you, Venus. I heard that mentioned this morning. We'll have our schedule up very soon. Looking forward to that. PMI figures came in close to expected at 10 a.m. DC time. Venus, thank you very much. You are awesome. Forecast 48, actual 47.7. Okay, in line with expectations. The big thing hit the markets yesterday was Goldman Sachs. Whoa, huh? Did you hear? Very interesting for those of you who have heard me talk about Morgan Stanley. All right, very interesting morning in terms of Bloomberg. Thank you for that, Venus. Thank you. Shout out, Venus. Thank you. But this morning, if you listen to Bloomberg at all, what was it about? It was about, in part, and very directed, focused, and without equivocation, the fact that, well, Goldman Sachs, you guys have to understand this. Goldman Sachs, those are like Elon's guys, right? Hello, Elon's guys. That's his team, right? But this morning, and you all understand with the event yesterday, Goldman Sachs, it's all about Goldman Sachs being on the ropes, big time on the ropes. They're like the number one boss dogs in the market, right? But they talked about today the notion, looking at a little bit of a descending wedge here, right? Coupled with a imbalanced head and shoulder with a flat top on the 15-minute. They talked about, and this is important for us to discuss, because I mentioned to you guys, yeah, I got an official offer, official offer with Morgan Stanley. I decided not to. I didn't want to sell things, this and that, whatever it was. They have a great training program. I've always said that, but yeah, that's my go-to focal, and you guys know this. I've said this for a while since I've been talking with you guys. If anyone has been listening, like, yeah, that was my outfit to go work at. If I chose to work with them, I got an official offer with Morgan Stanley. Now, I decided, hey, I want to go do my own hedge fund. Had a great experience. Would have had to probably wait like 10 years with Morgan Stanley to do something like what I went and did. It was awesome. It was a lot of fun. And even where I am now, I count this as over and above, definitely over and above of being Morgan Stanley. Suit and tie and desk, and could I get a different office because I just have a view of the building right across from me. It's just kind of depressing every morning. They do great work, bottom line. Bloomberg, talked about this morning the fact that in the context of the Goldman Sachs, very important information, relevant for us, Goldman Sachs struggling to get a grip on, guys, they're big top dogs, so it is relevant to us, but that they're really casting the shadow of Morgan Stanley. They did the earnings comparatives. They did all of this. So as we look at the markets right now, you understand the number one. You guys have heard me allude to this, but you heard it on Bloomberg this morning without a shadow of a doubt. Comparative figures, revenues, everything else, like, Morgan Stanley is. Yeah, they talked about there was only one Smith Barney. There was only one Smith Barney, right? Yeah, you got to know a little bit of history, okay? Smith Barney. Yo, what's up? Hey, Smith Barney. Hey, good guys. Good guys. Smart guys. TA guys, hello, Smith Barney. Don't worry about it. But you saw that this morning in Bloomberg. You saw the figures. You saw the discussion directed in the fact that the Morgan Stanley guys are really, boom, in terms of market performance, they're number one. Cast in the shadow is Goldman Sachs. Just note such, because you've got the relevance here is what? It's not me. Oh, talk again about me. No, the relevance is S&P, Morgan Stanley, numero uno, calling quit at 3,900. Yeah. The top dogs in the game. The top dogs in the game. Calling quits to the S&P at 3,900. Now, it pushed them around. Do you think that the market is particular about who it allows to short? Yes, it is, guys. It is. It is. So in terms of that, it's nice to see those names. And if you paid attention, I always recommend you get a small subscription, $3 or $4 to Bloomberg. Bloomberg. That's a good place to dial in. Venus, thank you for dialing in and dialing me in while I'm busy here. We'll work out the microphone and the touchback. And it is 10:30 in DC right now, so we had that information come out. Thank you very much for that. Lose the time on this end too. So might need a world clock up here. That'd be nice. We'll work on that maybe this week. So yeah, Morgan Stanley called quit to the S&P here. As this is tough, right here. Okay, this is the 4 hourly. They called quit at the level of resistance. What did it do? It popped them. Boom. Ouch. The number ones. Yeah, so if you're sitting there getting a little bit popped back and forth on the markets, now it recovered and it's making them look all right. I mean, they have a good discussion to talk about with the clients now. Yeah, we had a few surprises. I understand how things are couched with them, their clientele right now. You understand you get a few surprises in the market, but we've had this position, boom, 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 the bulldozer just going and moving that massive amount of cash. Like they need to keep it rolling, right? But that's a nice example. If you're trying to operate on both sides of the coin there, whew, guys, behind enemy lines means what? Means you're not fully or overexposed in the market. Meaning if you get that drop, boom, on the to lead into the bump and then the potential run in the market on expansion, you're always ready for it. No sad songs here. And nice to see the shot. I'm always going to like that because I know some guys at Morgan Stanley. I knew some guys at Smith Barney. Like I know them very well. Like in terms of TA and sharing that whole journey since the time I was in high school. Like I've known them very well. So it's cool for me. It's very, very, very exciting to know that they receive that level of recognition in terms of, unless I don't know, they may have some advertising deal with Bloomberg that we don't know about. We'll save that. But I'm interested in the notion that the S&P is over, literally. Based on what? Is it an indicator or no, guys, not me. It's the number one guys in the market. Hello, small amount of relevance. You guys agree? Small amount of relevance. We like the NASDAQ. It's the tech sector. It is the tech sector. I like the fact that Bitcoin is technologically oriented, so we pay attention to the tech sector. It has a little more volatility to it. We would prefer and hope that Bitcoin would attach into the tech sector for purposes of volatility. It should. Right? Unless there's some sort of stranglehold on it that there shouldn't be. So in terms of the details, I just want to, guys, remind you, once you're away from that 70 to 80% probability, you want to let your profits run? Let them run. You understand do you understand the risks associated with this? You may say, look, London, I decide I'm going to trade 5 of these because I've looked back at the patterns and frankly, what I see, London, is this. I see, and I've read through the authorities, I've read through Bukowski, I've read through every source I can get my hands on. 1 in 5 of these is never coming home. That's the one I want. 1 in 5 of these is never coming home. By coming home, I mean back to the level of resistance. And I understand you got a 62% to 68% probability of heading back to this level of resistance. But man, look, I got a sweet entry here. I got a really sweet entry here. And 1 in 5 of these is never coming home. Right? I mean, never coming home. Like it's not coming home. It's going. Maybe you want that 1 in 5. Okay. Maybe you've looked at it like that's a sweet going away party. You want to be a part of that going away party, huh? Hey. Excited about the progress we're making in seeing continually. And you guys know in the back when I keep putting the same rock the bells. When I keep putting the back and it continues to make money for VIP, hey, those infographics are they're powerful stuff, guys. You know that. The wedge tactics, yeah, pretty cool stuff. Wedge tactics. Some cool stuff that we're developing. It's the result of a lot of hard work. All right, and we're excited to share in just a little bit of hopefully soon cross recognition with other groups that are really, really working hard. And for right now, I will esteem into that group people like New York Institute of Finance and Tom Bulkowski. When you're getting into this mixture away from the 72% to the 85%, don't do it. Do not go hunting through the trash. I'm going to go dig through the trash and find something in terms of TA. Yeah, well, I can't find out the answer. It's about a 50-50 split. Develop your strategy. Develop your tactic. You have the answer. You just traded the answer. Boom, boom. You are the answer, guys. Don't go digging through the trash in terms of TA. Focus on the principled guidelines that guide New York traders, pro traders. Okay? Put your bookshelf up against their bookshelf. You say, well, my bookshelf doesn't look like theirs. Well, order another book today. Go get another highline technical book and see what you can learn. What do they have that you don't have? They're not Googling the answer. I'm going to tell you, they're not Googling the answer, guys. They're not YouTubing the answer. You guys know this. You guys are doing great in the back. It's wonderful to see you trade. 15-minute is an outlier right now. 15 minutes is an outlier with a flat top resistance and a descending line of support. It's just an outlier. We have a bullish expression in the form of a descending wedge. We're going to continue to trade, but when you fall away from this 70+% probability, 72 to be exact, when you fall away from this primary move, just celebrate the good news that you just booked a great trade or you are in the money. Boom, boom. This is London. We'll talk to you guys soon. Pleasure to stream with you. A little bit less volatility today. We front ran that last night. Keep an eye on Bitcoin. What does she like to do? At some point, yes, we have this correlation. Well, Bitcoin, she likes to move a little before or after the fact, or you guys know this, before or after the fact, because Bitcoin has the weekend. Bitcoin during the weekend, she has those weekend hours. And just to throw this up to show you guys what is currently in play and potentially can keep us off that line of resistance. Now, you can say, I say potentially. It should just be, what should we say? It should nearly just be a reference point to the 5-minute 20 moving average. Dig into the smaller time frame of your choice in that 20 moving average, over or under. Target to the upside or target to the downside. And I bring up this specific pattern, the symmetrical triangulation. Guys, this is easy stuff. I don't know how many people will literally just tell you this is easy stuff. Easy stuff. You're going to get your patterns down. You're going to be able to operate in the market. The difficult part is really becoming competitive through a high frequency, high number of trades, and to be able to wake up in the morning, and know that you can book 4 or 5 positive trades that day, no sweat. No problem. Okay? And if you're not there, I want you to get there. If you can't book 4 or 5 trades, your next 4 or 5 trades in a row, I want to get you there because you're in my trade group. I'm in your trade group, right? I'm a VIP. I know what that feels like. And I talk to VIP who know what that feels like. It's a good day, guys. You wake up, it's a good day every day. It's just a good day when you can go and book 4 or 5 positive trades, no problem. Consistently. Any day. Any day. You're going to go book 4 or 5 positive trades. Boom. You have to engage in the process. You have to know your probabilities. You have to be able to cover a position. I'll say you have to be able to cover a position. The market is real friendly. And you start to find that out when you're not overexposed. It's like, man, can I lose? At some point, you're going to get to the point. Don't go there. You look at the symmetrical triangulation, right? Purpose back in through this level of resistance to support. This is in play. There's a bottom line. The specific cup and handle, yeah, as well. We do have nice upside target with the symmetrical. We'll get in the back. We'll go over the details in terms of the targets and moves. Let's just go ahead and line out what we could have in terms of the upside projection. That's just my real goal, is to see you guys trade a lot, to where you get to the point to where you just feel inconquerable in the market. And when you get there, understand it's not you that's inconquerable. It's your modified way of interacting with the market, your modified understanding of how the market works. And at some point, it's that participation with the maximum degree of probabilities. Yeah, and you feel like, man, when you're in line with and in sync with the 75 to 85% probability, it becomes easy. When you're not just dangling the carrot over to the market and saying, hey, I'm overexposed, might as well just eliminate my account, it becomes easy. Things become a lot more digestibly easier to understand in terms of how you're being successful in the market. And that's my goal for all of you in 2023. Let's do it. We'll talk to you soon. This is London. Pleasure to stream with you this morning. And remember, guys, make sure you eat well, sleep well, take care of those relationships you knew were worth investing in before you started investing. And now that you're investing, take care of these relationships. Let's dig back to, I'd say, a key focal here in terms of the specifics on the Bollinger Band, on the 8 hourly before we leave, because this is a little bit of a dance. You guys know we talked about that in terms of a little bit of a dance to get up and over the 4 hourly. We did it. Right, a little bit of a dance to get up and over that 4 hourly, hit topside target. And that's more of a dance to the downside band as the target, back up and over to upside band, perfect in line with our golden short. And now on the 8 hourly, this is where we're at. Bulls need to hold up and over topside band potential. You guys tell me the price on that. It's going to be a topside band. It will adjust to not project immediately there into. Be prepared for some lack of predictability this week. And we will continue to trade. Guys, it's London. Pleasure to be with you this morning. We'll talk to you soon. Thanks so much. Bye-bye.